Check, check. Quick sound check. Can everybody hear us loud and clear? What is going on? Well, how we doing?
Oh, doing well, Coach Jay. Doing well. How are you today?
Doing well as well. Doing well as well. Is today Thursday?
Yeah, it feels like one long Monday.
Yeah, it really does. I actually lost track of what day it was. It's been a long month this week. But we're here Thursday. One more day to go for the week. Welcome to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity, see how we could have taken advantage of those opportunities while managing our risk. It's our first time meeting. I'm Coach Jay, been a top step performance coach since June of 2023, been trading for the past 13 years and in the futures markets for the past 6, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep for 2 years. I've been involved in the futures trading industry for 4 decades. I'm here to share some experience, some knowledge, and perhaps help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. You are all our audience. Thank you for joining us today. Uh, Audience is looking a little light, but that's all right. Well, Coach Hugh's here, Coach. That's what I
Well,
used to say with
Coach
my
is here.
so I used to say with my AAU teams all the time. It's just kids had, especially when they get older. It's just like they got better things to do. They don't want to focus on basketball anymore. Get 3 kids in practice. It's like, all right, well, you'll get a one-on-one training, but
There
let
you
us
go.
let us know how you did. And the Eagle liked the video already. We appreciate you. Let us know how you did today. Where maybe you were up on the day, down on the day. Anything that you learned from the day. Pretty volatile. Uh, Paul H says that I've lost a bit of weight. Thanks for noticing. Spectacular day. Very happy. Follow my process on every trade. Stopped at my high of day. Nice trading, Paul.
Nice.
A shout out to
Oh,
Dan Trader, who's always first in the chat. Hope you're doing well as well, Dan. You got a comment from Chris Green, coach. Took your advice, took a day off, locked out of everything, low on energy, etc. Traded well in practice.
good. Yeah, we need a rest. Actually, with that, I got almost 10 hours of sleep last night, and I haven't done that in
Nice.
about a month.
Nice.
So,
Nice. Nice. Electrodelic up 3.3K in a brand new 150K XFA, caught the morning flush and went for a 5K run. Nice work. Make your money, get off
nice.
the charts. GDL stopped trading early, too choppy for me. Okay, good observation. If it's not your price action, you don't got to trade it. I've been losing funded left and right, and I've been trading micros, been blowing accounts on the first day, kind of frustrating. Austin, that frustration is causing you to blow accounts on the first day. We can't, as traders, well, we can, you can do whatever you want, right? Remember, everything we do is a choice. But losing the account on the first day is taking an apathetic approach to trading and saying, hey, it's either going to work or it's not, right? And there's no in between, and I'm maybe not even willing to do the work in between to take it. Manage your accounts, right? Put a stop, give yourself 2 days. Really, you should be giving yourself 10, but one day is just like, hey, it's almost a roll of the dice. And if you're in that space, I think it's a good time to kind of take a step away and maybe take a couple days off, right? Because you're just gonna cycle. So if you're in that space, take a step back and come back to trading when you have the appreciation of what it takes to do it every single day.
Yeah, there's no power in force. You cannot force this.
Yep.
And it seemed to me, I know I tried,
Yeah.
and when I do that, the market beat me 100% of the time.
Every single time.
So don't force, relax. Like I said, Coach Jay said, and I'll reinforce that. Take a few days off, and relax.
Yep. Yeah. All right, let's get into these markets. We did have some news earlier today. We did have a CPI number come out and jobless claims as well. Jobless claims came in at expectations. Forecast was 223,000, came in at 223,000. We had CPI year over year coming at 2.4%. Forecast was 2.5%. Month over month change of negative 0.1%. And then core CPI came in at 2.8%. Forecast was 3%. We did hear that the tariffs for China were increased to 145%. And that was really it. Anything else you got on the news, Coach?
No, I think the biggest news was there was an inkling or a signal sent that we're willing to deal to China if you're nice.
Right.
Not my style, but at least that was thrown out there. But the bonds immediately rejected that. So, and there's still a lot of volatility across the board. Currencies, interest rates, obviously the equity indices, crude, the energies. So we'll see. I don't think the Chinese are playing, but we'll see. The markets aren't showing it. And I don't, I trade markets, not politics.
100%, Coach. I agree with you there. We have to trade the markets. And speaking of which, there are 35 different markets we can trade with Topstep accounts. Today, to the downside, we had the Russell down 4.18%, the Nikkei down 4.33%, and natural gas, our biggest percentage mover, to the downside at 7.84%. To the upside, we had the Swiss franc, Coach. We're going to talk about that one for sure. 3.52% to the upside. At one point was the biggest percentage mover to the upside on the day. Recall, traders, that was on Coach Paul's scouting report on Tuesday. Gold up 3.59%. Didn't make new all-time highs, but we're pretty close. We talked about that yesterday as well. And then copper up 4.39% for our biggest percentage mover to the upside. Talk about our big four. We already mentioned gold. Crude oil down 3.48%. S&P is down 3.51%. Gold again up 3.59%. And the NASDAQ down 4.2%. The NASDAQ did hit the limit down 7% on the day, but it didn't halt. And the message from the CME was we were waiting to see what happened with the S&P. So let's talk about these charts.
Wait, say that again, Coach. I didn't hear about this, and it kind of my brain hurts.
The NASDAQ passed that 7% threshold down, but I guess there's like a 2-minute window that the exchanges have to kind of assess what's happening, and they were looking to see whether or not the S&P was going to do the same to hit the limits. So they never actually halted.
Was the Dow there?
The Dow, I don't believe the Dow was. Paul says I thought they were automatic circuit breakers. I thought they were too.
Yeah.
Apparently they're not. That's not following the process. Billy says, "Yeah, I don't know."
Yeah, well put. What process is that?
Who's done that as a trader, right? It's like, oh well, it's down 5,000, but maybe we let it go down 5,500, and then it'll turn around, right? I've done it before, and apparently it happens on the largest scale also.
Wow, I'm marking that down. I gotta call a couple people. What the hell? It is or it isn't. There's
that's what I thought. That's what I thought. I thought it was I really thought it was automatic, but it wasn't, because we definitely hit price limits on the NASDAQ.
Wow. Okay.
CME moved their stops. We appreciate it, guys. The market bounced from there. Go ahead, Coach.
Nothing good to say. Don't say anything. So I'm not going to say anything more.
All right. Let's look at these charts then, Coach. Why don't we? I have a NASDAQ chart up here. Let's look at last night's open. Why my fib looks like that? We'll fix that in a second. Let's get all these out of here.
Fibbing you?
Get all those intermediate levels out of there. Extend those to the right. All right. There's last night's 30-minute open, Coach. What are we looking at here?
Well, after yesterday's record rally, stalled. It stalled early. No buying. Now we look at VWAP. When did it leave the range?
Took a little while.
Yeah.
It did do it. I think we started to see momentum pick up a little bit when the Asia session opened. I think we left on the Asia's opening range. Yeah, Asia's open is right here. And that's when we started to pick up some momentum to the downside. We didn't leave, VWAP didn't leave the range for a little while, but it was kind of leaning that way. Um,
Yeah.
acted as a
One thing
resistance the
in
entire way down.
looking at that, that could have been very hard to sell because at that point, it was down 150. I don't know, something like what let's see. What was it?
The Nasdaq at this on this test of VWAP, you're saying right here?
When it broke out.
Yeah, at that point we were down about 100. Yeah, 150.
Okay. Now there's a we're talking about I want to talk about perspective.
Hmm.
If if it's just price that a decision, it's going to be hard to sell at 150 lower because we're used to the last before this volatility. That could be the range for the day.
Yeah,
Um,
seriously.
that was the range for the first couple hours. And it's hard in our mind to go, well, I can't sell it now. It's 150 lower. But that's a relative term. And understanding that if you want to take that trade, that breakout, that's why you have to define how much you're willing to lose. If it's based on, well, it's 150 lower, I can't take it, you're missing opportunity. At least that's been my journey. It's like, I don't even want to know the price. I really don't. I want to know the risk.
Yep.
So that's why I use two ATRs, and it's still on a micro. Remember, this rallied. I still find it hard to say. Yes, was it 1,900 points yesterday?
From the time that volume came in to the high, yeah, about 1,900 points.
1,900 points. Today's range. Now we're talking 150 points, and today's range was 1,466 points, roughly 1,500.
I do want to clarify something real quick, Coach, before we continue to get into these charts.
Uh,
The limits, the limit down, right? Thank you, Andrew, for sending this over. What happens when the primary futures contracts decline 7%, 13%, or 20%? With a 7% decline, if the primary futures contracts limit is offered at the 7% down limit before 2:25 p.m. Central Time, a 2-minute monitoring period will commence with for the primary futures contract and all associated futures and options. During this monitoring period, trading will continue at or above the 7% down limit. If a limit condition exists at the end of the 2-minute monitoring period, a 2-minute trading halt occurs for the primary futures. Uh, if a limit condition does not exist, trading will continue with price limits expanding to 13%. So that is by design. If we hit those limits, they monitor to see whether or not, I guess, we continue to sell or if the markets bounce from there. So thank you for sending that, Andrew.
so there's discretion.
There's discretion.
Hmm. Hmm.
All right, but back to this sell-off here.
So why I want to bring it? Remember that it's relative to the volatility is relative there's a direct link to our risk. That was a great trade.
Yeah.
And that continued all the way to we have the half hour.
This is the half-hour chart. Let's for more a
What's that white line?
little more dramatic effect. That is the 200 moving average, Coach. But let's look at it on the S&Ps, the market that I should have stayed in today. The 200 moving average right there, that white line on the 30-minute chart. You know that Coach Paul has been talking about this, and we've been talking this week about taking a technical approach in these markets. These don't change, right? Coach Paul, I've been working with you almost 2 years now, and we see this 200 moving average, whether the volatility is extreme or we are, in slow times, on this 30-minute chart, that 200 moving average being an important level for the most point. Now, again, anything we say here is for educational purposes only, not a suggestion to take a trade. But when you see something happen that frequently, it's kind of hard to ignore.
Yeah, this isn't. This is just a review.
Yep.
Those are technical levels that I've been looking at for most of this century. But what else was down there, Coach?
Uh, was another level. You guys all know how I look at volume, and why not the same way we look at news candles, right? We look at the high volume that started the breakout yesterday. Uh, and to within a couple points, that was the low for the session on the day. These things happen consistently. From that low, we're talking about another 8%. Coach, I did not have a great trading day. I had a daily loss limit day today with my trading. Uh, Kind of was looking for this move to happen, and I think like we can at times as traders is when you I hesitate to say that something's going to happen, but when you have a high probability trade set up, I think what happens a lot of times is you can over leverage, and over leveraging kind of kept me out of this move. So if I had to give myself a grade for the day, it was an F because of over leveraging. But this trade setup uh, was
Oof.
pretty clear on the day, Coach. I did get a question from some of the VIPs why the sell off today. There's a couple of reasons for it, but you can see everything that we just talked about, right? This high volume, getting back to 50% of it. Coach Paul's 200 moving average. It's reasonable to have a short target of 200 points, 300 points in the S&P in these conditions. But in that, you have to execute it the right way. Uh,
Well,
that was a reasonable profit target. Go ahead, Coach.
so one of the ways to think of why it went down
Mhm.
is we can think of a reason from the headline, or
Yep.
we can measure buyers versus sellers.
Mhm.
As traders, from my experience, measure buyers versus sellers because the conglomerate of all factors comes to put up or shut up
Right.
or margin, skin in the game. So one of the ways I avoided it being trained as an economist was don't like today. I didn't know about CPI. Was it CPI today?
CPI. Yep.
In this volatility, did it really matter? Well, I guess maybe it did, but
It,
it's
it
the
gave us an
output.
entry. I'll say that it gave us an entry, but it didn't really matter.
Yeah, it gave us an entry. There you go. If you want to go off a candle, why don't we go over that candle?
Here's the CPI candle. And we've talked about it all the time, framing out these news candles and seeing how the market responds to it, attaching a VWAP to that. And my first trade of the day, Coach, was a short at 54.17 in the S&Ps. And I can show you the executions. It's on Quant Tower. It's on my Topstep
Oh man, you
XFA.
got burpees. You,
And I,
you got 10
I'm
burpees.
definitely going to the gym after this for sure, 100%. I need to pay for this one. Yeah, my first short was 54.17. And again, do I know that this is going to happen? No, but there's a reasonable expectation of having a profit target down here. Now, how do you execute it is a question. And I don't know what the CPI number I guess came in better than expected. So maybe it means the market's supposed to go up, but the flow from overnight from when we started the session, Coach, by the time we got to that CPI print was negative. Uh, what I realized and why I was comfortable taking this short, we were still under on that spike. We couldn't get back above the VWAP from the full session, right? So we got
Yeah,
a print that if it's favorable to the market should get above technical levels, and we couldn't even test VWAP. Take the short, my risk goes above the high, and go from there. But at the same time, it's a pre-market trade. And we've talked about these before. once we get to the low of the candle, I start to think profit target. So I took my profits there, and it was a great trade. It's fine. But again, that CPI number really didn't affect the markets, just like none of the what are normally big planned numbers. They're not moving the markets right now. Everybody's focused on tariffs.
Boy, look at that. That's the session VWAP, right? The yellow.
Session VWAP is the yellow. Yep.
So when we just talked about that, why is that? There are no buyers at a discount.
No.
Wow, that right to the tick. Yeah, I love those charts.
Yeah. And what we're looking at here is just the flow, right? There was a question here from Extended Trip. How you doing, coaches? Do you guys have any advice for a scalper who's trying to convert to an intraday trader? 30-minute to all-day hold times. I use VWAP and volume profile. In cases where you're trying to hold trades and one, identify the flow of the market and do what you can to stay in that flow. If you're going from a scalper to trying to hold trades for 30 minutes, you might be, 100xing your average trade time. But if you can identify the flow, and we identify the flow using VWAP, right? We can see it here. I took the candles off the charts, and from the overnight session, there's a clear trend. I have written on this notepad over here, listen to the flow of the market, right? What does that mean? If I'm reading this VWAP, regardless of what price is doing, and we have all these, if I look at a shorter time frame, and a lot of probably scalpers do, there's a lot of overlap here, but the flow never changed. It might have taken a little while to get going, but the flow of the market didn't change until we got extended. So identify the flow of the market and do what you can to follow it, and not try to tell the market where it's going.
One other thing I would add to that: start with 1 micro.
There you go.
You can't, if you're converging, you have to cut your size drastically because you're giving it more time. If you're giving it more time, you have to take out position size and then build. And then you can build it after some experience, and you build up your account.
Yep. 100%. Trade small. All right. We got to that 50%, coach. Anything else you want to talk about in the equities?
Boy, did we have a J trade off that?
We did. Yeah, we did.
Okay.
Hold on one second.
Let me needed to know.
And if you guys are new, the trade that Coach Paul is talking about is a high volume at the low or high of a move, and then the reversal from there. It's not what I wanted to do. So at the low of this move, exactly where 50% of that high volume from yesterday, we get this highest volume of the day. Yeah, that was the highest volume of the day outside of the close. Right, highest volume of the day at a major demand level down there. Right, this candle closed lower than it opened, so it shows up orange. But if it's the highest volume of the day, we have to assume that there's some buyers in that as well. And then once we get a close outside of that candle, and we've talked about this trade, I don't know how many times at this point, coach, but once we get a close outside of that candle, this is a beautiful trade to the upside. And maybe you don't catch this long, but if you were short, this is a decent signal to say, okay, you know what, the momentum to the downside might be finishing.
Yeah, and it's a great perspective. If you're short and you see something like that, and it hasn't hit your target, now you have new information.
Yep.
And that's pretty important information. The selling stopped. The way I look at it, it wasn't buying, but the selling, the pressure, far away from VWAP from the opening. I mean, I know I was guilty of it. I'd be stubborn. If it got
Keep
like
going, keep
5
going.
points, keep going. Hey, oh. And then you get, and come on, Abel, we've all gone through this. Next thing you
Yep.
know, you feel like someone just took away our, candy like a baby. Like,
Right.
I'm just, you can't do that. And then what happens?
Turns right around.
You've been
Turns.
there. I look at this. If it doesn't hit my price, man, I'm done. If I'm short, I'm done.
Yep. And Billy says that was around 5% as well. Yeah. Again, those price levels, those
Oh,
5% levels, I think it was 18,324 in the NASDAQ. Pay attention to the price action around those levels, right? Uh, we haven't had limit down days since COVID. We've come close, but we haven't had them. So for us not having them, 324 was the price in the NASDAQ, uh, which is that was the price, right? 18,324. Yeah. So, coach,
it's
18,324 is 5%. If I measure from here to this low, that's another 2.25%. So we were down 7%, and then we bounced from there. But we understand now that we have that two uh
discretion.
2 minute discretionary period.
Hmm.
Same trade here in the Nasdaq though. Right off that 7% level. Is it a coincidence that volume comes in there? No, right? Because if the volume doesn't step in there, we go limit down.
Or what's called lock limit.
Right.
That means it's offered and it's offered with size. That means it's stuck. Not surprised you saw some the selling stop.
The one thing we do know is if you're in a Topstep XFA or live account, you couldn't trade any of this price action down here. But we're going over it because it's a technical pattern that we see set up all the time. Um, and you know, maybe there's opportunity to take above that 5% for a little bit because this is not a small move, even above that 5%. Anything else you got on the equities, coach? Let's take a look at the daily really quick, and then we'll move over to gold and the other markets. What's that yellow line
Hmm.
up there?
The 20-day moving average. What
Second
we
time we
got
hit it.
to. So, looking at this, just to review, we got there, just to add to the question about what drove us down or what happened. If we look at it from a buying point of view or a dynamic buyers versus sellers, all that buying got to that 20-day moving average, and there was nothing above that.
Nope.
So, in my book, that rally was a short covering rally, which are violent in and bear markets.
Sure.
Now, does it continue? I don't know, but we use the 20-day moving average as a barometer or a benchmark.
For sure. I do like the fact that we did close above 50% of yesterday's range.
Mhm.
Uh, that does look somewhat bullish to me there. But again, unless we start to see some daily candles close above that 20 moving average, this is tough
Yeah.
to really want to buy this. But it looks decent for now. We'll see what the rest of the week or just tomorrow, Friday brings. All right. Gold.
Gold. It's that time, the golden time.
Again, what's that yellow line?
20-day moving average. Why and it went often and early. Now look at this. See this candle from yesterday. When we're thinking about yesterday's move to the 20-day moving average, what did we get? If we just saw that, we were talking about this yesterday.
Yep.
That high from yesterday, we had follow through and on time and volume.
Mm-hmm.
So at that point, let's remember that price. We can mark it off the 20-day moving average. Let's see where we started last night. Frame out that first half an hour. What's that white line?
The 200 moving average. We traded above it yesterday, and here is, let's take these off now. Low of the day, right on the open.
So we had continuous buying over that candle at the 20-day moving average versus NASDAQ and S&P did not.
Yep.
That's the way I look at the world. It's almost A or B, plus or minus. But what an extension. That's $100 move.
Yeah, this was a huge one. I took this trade last night during slow markets with Dakota. Uh, I wasn't quick enough to put it on in the XFA that I had because I didn't have Quant Tower open. And I was trying to do it on my phone. And I didn't have the app open. But this exact trade, right? If you guys were watching that, we did see it play out. I took the trade a little bit later, Coach, because I wasn't at my charts at 6 p.m. last night. But yeah, I mean, it's the same, again, same technical setup. We build the puzzle. The market's in an uptrend. On the daily, the 200, the 20 moving average is holding, which is this yellow line. Low tick. Yesterday's high is this white line right here. I'm gonna go down to a shorter time frame to where I kind of took the trade, but here's why I had some decent conviction in that. And I took my trade based on the Asia session opening range because this is when I started to look at the market. Right. So I'm gonna move this over here, which is 8 p.m. Central Time. Sorry, 8 p.m. Eastern Time. And I'm gonna put a same thing, a VWAP there. So I have VWAP from the full session, and then VWAP from when I started to look at the markets. The flow is to the upside. Now it's not the most convincing. It's not this immediately urgent flow. But once we started to leave this Asia session opening range, Coach, and we got a retest of VWAP, I'm gonna get in with a couple micros, right? I traded this one well, and you know, my stop, because we've already checked that 20-day moving average, is gonna go below that. Right. This is like a perfect combination, I think, of both of our trade styles, where this is a wide enough risk that I can afford it, and volume is leaving the range, and go from there. So when this market pulls back here, right, at this point, invalidation of this trade has nothing to do with my account value. It has everything to do with where the market needs to trade. This is how we should trade. I hit my daily loss limit in the uh, XFA that I was trading this morning because invalidation of the trade for me was based on my account value and not what the market needed to do. Right. In this case, if you trade below the 20 moving average on the daily, go ahead. Then that means the thesis for that trade is wrong. But if I get stopped out here on a daily loss limit or a max loss limit, I didn't measure for what the market needed. I was only measuring what my account could facilitate.
That's measured risk.
Yeah.
Wow. What? Yeah.
Yeah. Brad says, thanks for, go ahead, Coach.
Gold is in, plus gold is rallying in the face of bonds breaking.
What does that mean to you?
It just shouldn't be happening. That means I'll put my tinfoil hat on, or I'll just study what the background is. Who would be buying? That's massive buying. In my book, we've been talking about this a while. Who would be buying an entity? Maybe the Chinese. It's part of this trade war. We're not gonna. We'll get out of bonds. We'll buy gold because you're not a reliable partner. It's like a divorce almost. It's like, and it keeps happening. We've seen this pattern with higher interest rates. It should be affecting the gold, especially, and gold just keeps rallying. Why do interest rates affect gold? Because it costs money to store gold and you forego interest. So over time, it's a bigger cost than it appears. You need it to continue to appreciate because you're foregoing interest. And on a fundamental basis, this shouldn't be happening. So, but it is, and we're traders. That's why you don't hear me wax fundamentally. Very interesting because that's allocation. What I mean by allocation, that this wasn't just trading some shorts. This was a powerful move. This was buying, especially against near all-time highs. It's relentless. So that's all I have for gold.
Awesome stuff. Thank you, Coach. Brad, nice trade. Chauncey has a question. What do we do when the markets go back to normal? Slow markets is going to feel so slow. Yeah, take advantage of this volatility while we have it. It might last a long time, but it's not going to last forever. So
One other
appreciate it
thing
while
you
it's here.
do, you're going to get a chance to adjust your size.
Yep.
You can do more, but you're going to have bigger. You can do more contracts. It's relative.
Yep. Shivam Quatra has a question. Really important one. How are you using VWAP? 5 question marks. We're using it to identify the flow of the market sheet. So basically what that means is if you attach a VWAP, and what I'm using here is anchored VWAP. So I'm anchoring it to high volume on the market that I'm trading. And what we're doing is we're trying to see since that high volume printed, what is the flow of the market? Is it flat? Does the market with volume trade above it? And the reason we're using volume is because we believe that volume moves the market, right? Price can move, but convincing volume gives me a little bit more confidence in the trades in a specific direction. So if price is going and volume is going with it, I have more confidence in that trade. And that's how we're reading it from there. Sometimes VWAP is going to be a flat line. Let's look at the S&Ps yesterday before that major spike. I can draw it, right? VWAP left that range, and then for the most part was pretty flat. Flat VWAP means range bound markets. So if I'm looking for directional trades, they're lower probability because volume is comfortable trading in this range. Once volume gets directional, now we have a trend, and I'm looking to trade against that trend. This volume left this range. I'm looking to trade with that trend. All right. Anything else you got on that, Coach?
That's it.
Good stuff. All right.
Crude oil.
Crude oil. Let's talk about crude. I didn't even see what crude did today. Take a look.
Kind of look like NASDAQ.
Huh. Yes, it does. Exact same chart, right?
Now, this is a little different in that the NASDAQ to 200, we were above the 200, away from it, pretty far away. I mean, higher. Here we did, but look at the slope of the 200. It's still sloping down.
Yep.
It hasn't found balance. And crude only went up because stocks went up. It wasn't something in its own fundamental structure.
Mm.
But once again, let's look at how it opened last night, because we don't care what it did before. Really, we're day traders.
That's a fact. Here it is last night. Man, wow, there was some great
Okay.
trades.
That's all. I'm done. I'll give it back to you, Coach.
What am I supposed to do with this? It just went down.
Get short.
Right. Yeah. Get short. Get short.
Or don't buy it.
Right. And we're joking a little bit, but the framework, right? If we're identifying the flow of the market, and that's our job, crude oil closed today at $60.23, right? It's been in this heavy downtrend the entire time. So I think it's fair to start looking for downside opportunities. It's not always going to present one, right? In this downtrend, we're going to see some counter trend moves. We've seen it in the equities, we're seeing it in crude oil. But once the flow starts to go in a direction, especially leaving that 30-minute opening range from the Globex session, there's some confidence in that trade. And now look at this VWAP, right? Every time we test it, that flow is continuing to push price lower, and it's not price just going without it. If price goes too far away from volume, at some point, the bigger players are going to say, "Hey, you know what? No, bring price back to where we are," right? And but in this case, we're seeing heavy volume continuing to push, or heavy relative to what's trading for the day, continuing to push us lower, and that's how you get these trending markets, where selling needs to happen in crude oil for whatever reason. I don't know why they're selling crude oil, but they are, and our job is to just to identify that flow and try to get in it. Um, all right. Genius Genie says, I saw you use a 4-day VWAP. What is the reason for this? Also, how can I learn volume analysis like you do? It is awesome. I would suggest for volume analysis, check out Anna Cooling's YouTube page. We're going to try to get her on there. I'm going to put this out there in the universe. Anna Cooling, we would love to get you on At the Buzzer with Coach Paul and I. And I'm going to send you a message on Twitter to see if we can get that done. But I would suggest reading her book, looking at her YouTube page, and then Brian Shannon's Anchored VWAP book. I would definitely suggest that as well. Or you can ask us questions here during At the Buzzer. All right. Go ahead, Coach.
Here's Brian Shannon's book. It's always within arm's reach.
There we go. Mine is behind this green screen, but I would grab it if I could. It's a great book. It's a great book. All right. Scott Vaughn, have a good one. Swiss franc, Coach. Swiss franc. What did you see here? It was one of the biggest percentage movers on the day. At one point, was the biggest percentage mover on the day. We'll go out to the daily. Go ahead, Coach.
All right. Well, let's set up. First of all, I see it. If we remove the candles, I love to do it. Now, does that look like a cup? A basin?
Yeah. Yeah, it does. I can see that.
We did have that. Okay. Now we had the 20 crossing the 50. And we closed above the 200 on the daily. So we can put our candles back up there. All right. And that's when I would say that's the one. By the way, all the currencies rallied, but this one rallied.
This one went.
Was 500 point range. I mean, it was up 500 at one time. Well, look at the bottom. Look at the average true range.
Yeah, I mean, it exploded on the daily. That's the highest we've seen it in the last 5 years, at least.
Yeah.
I want to ask a curious question. Why the Swiss franc?
Well,
I don't know but I'm just curious because that's a crazy move.
When you think Swiss franc, Switzerland, what do you think?
That's where all the money goes when you don't want to. Yeah, go ahead.
Yeah.
Yeah.
Stability.
Yeah.
Stable banking system.
Yep.
Swiss watches are made of mostly gold.
Yeah.
If I'm removing it, all right, and then to a wealthy person, you're going to move. You'd like to move into some assets in the Swiss bank accounts. It's been around since for 150 years.
Yeah.
But it's stable. You can trust them. That money, this is my scenario, used to reside here. It's become an unstable system.
Economic environment, yeah.
Economic environment. Bonds breaking, gold rallying, Swiss. It shouldn't happen. We're having a decoupling because at the dollar, as interest rates go up, should attract capital, and we're witnessing it. This is a change in regime. So, for currency flows, that we see the bonds breaking, we see U.S. equities breaking, that money flow is going where? Well, Swiss franc,
Yeah.
gold, euro currency, yen. They all had big days, but the Swiss was the biggest. We could bring up euro currency and replace that.
Yep.
Japanese yen. How about something we don't look at? British pound.
It's getting there.
It's getting there, but not as dramatic. It's because we're still yeah. What's that?
Mexican peso.
That's the one I wanted to see. How about it? The Aussie dollar. Wow, that's a big move, but shocking. Look at wow.
Has some room to go, maybe.
Maybe, but it's under the 200, and it's been.
Yeah.
I didn't. That is that a daily?
This is a daily. Yep.
My Aussie friends, what happened there? I haven't been paying attention to it. I quit trading because it was in such a tight range. Wow.
Mm.
A
A lot of movement in the currencies. I know he's writing something. A lot of movement in the currencies. I know we focus a lot on the equities, and the equities have been presenting great opportunities, but everything that's going on here is affecting literally every market that we can trade with Topstep accounts. So if you're struggling in the equities, maybe look at something else. If you made your trades for the day and you want to test something else out, the currencies are presenting great trade opportunities. Let's go back to the Swiss franc for a second. We looked at the daily. What did this look like on a shorter time frame chart that we execute on? It's the same technical setup, right? So for me, and I'll give you guys, chat what I kind of do, and I probably need to be a little bit better at. I asked Coach Paul what's on his scouting report selfishly, uh, because he's never going to talk about a market that doesn't have the potential to move. Now, that does not mean that you should just go and trade it um, based on whatever information he gives, right? Because what we do here is for educational purposes only. But when we ask for a scouting report, it's the market has the potential to move. And then this was on the scouting report from Tuesday. If you look at Tuesday's price action, it wasn't the greatest trade because so the market still has to present an opportunity to trade. But when it does, and you get something like this, and I need to be better at this. It was the biggest percentage mover of the day. So, Coach Paul, I'm going to ask you again. It's on your scouting report.
Um, nothing. I wouldn't. I'm long it in my portfolio of
Okay,
my swing trades,
nice.
but I don't suggest jumping in now.
Correct. Correct.
There's downside risk.
100%.
Um, so I don't have anything else. I mean, I will
It's
let you
moving.
know. There's nothing that stands out. But buy the dips.
That's what it looks like for now. So now I would take it from a technical perspective, right? We're above the 200 moving average. Is there opportunity? I can't just say, "Hey, I heard Coach Paul say it on Topstep TV, so I'm going to jump in and buy it," because that would just not be doing my due diligence as a trader. Uh,
Please don't.
right. So please do not do that. Right. Nightbot, where are you? Post that risk disclosure. But everything we talk about here, guys, seriously, is for educational purposes only. Um, but it's information, right? Take it as information and then apply your strategy to it. Um, Steve R says, I've known for a year that the Swiss franc is where you go when the dollar is weak and totally missed this because I forgot. Write it down. Write it down. Got a couple of questions here. How much time we have? We got about 7 minutes left. Iceman 3K says, can you please discuss your volume strategy while using Quantower to determine a breakout? That could be a whole hour class in its own. Really good question, Iceman. Basically, what I'm looking for, and you can do it with any platform. What I'm looking for in Quantower is where high volume trades, right? And we show examples just using the volume indicator because you don't have to get super complicated with a platform that shows you everything that Quantower does. Find high volume, see how the market trades after high volume. Here's a Swiss franc on a 1-minute chart. I'm just going to pick this high volume candle because it sticks out compared to everything else. I do the same stuff on Quant Tower. It's just a little bit more in depth. And sometimes I think, do I even need to be that locked into it? Picked a high volume candle. It's a 1-minute candle. I don't usually use 1-minute charts, but same concept that we've talked about, right? Pick high volume, see how the market responds to it. With VWAP, volume leaves the range, risk goes on the other side. And that applies to anything. You cannot fake volume, guys, right? We're trading huge markets.
Write that down in stone. That was
Can't fake
one of
it.
the greatest, in my 40 years, one of the greatest statements.
Yeah. You cannot fake volume because we're trading capital markets that capital has to move around in. And the great thing about trading futures, trading on a centralized exchange where we can see the volume be executed. Now it's up to you to execute your trade plan, but this is it here.
You know, it's amazing on that volume.
Mhm.
Look at the candle. It's just an average size candle.
Oh yeah, which is a great sign
So
that
yeah,
a big move is coming.
that's stunning. Why? Because here's why a value of studying volume versus just price. That candle right there is not created equally to the other candles. There's a lot of information packed into that. What does that mean? You can't fake volume. Some big buying came in there. I'm just stunned that it was absorbed like that.
Yeah, and that was kind of at the high of that move at that point. Oh wow, look at okay. So
Yeah.
what was this? I'm assuming that this was a high of okay. So here's the CPI jobless claims print, whatever it was. That was that high there. We saw the biggest volume of the day after that point was maybe somebody got liquidated right here above those highs of days. I could imagine that. Interesting. Interesting.
We could go on and on, but
We really could. All right. We got a couple more questions here. So what had a question? How can I correctly react to key levels using volume? Exactly what we just talked about, right? If you want to identify a level first, we had that sell off in the equities. We identified the level as 50% of the high volume from yesterday. Then if you want to use the volume to read it, then we got that exhaustion move, and then you go from there. All right. Anything you got before we go, Coach? Getting something set up on my side over here. Anything
Yeah.
else you got before we go?
I just wanted to reiterate to newer traders. You don't have to replicate what we're doing here. Learn and create your own trading plan. Take it a little bit, whatever you can learn, so you can execute that plan. It sounds easy, but it has to, I'm not a big fan of executing someone else's trading plan. If that's what you want to do, then get into a fund.
Right. Just have them do it for you.
If you want to, you need to develop something that you can execute because you're responsible for all the decisions. So focus on that. And then in the middle of that is risk management. So I can't say that enough. And good trading. By the way, it's going to be Friday already.
Yeah.
It already is in Asia. I think there's going to be some wild moves tonight.
I agree.
I don't think anyone wants too much risk over the weekend. By the way, I usually do on my swings.
Taking everything off.
I don't take. I hedge. I get to hedge those with options, but I rein it in.
Yeah.
Because this environment, this is when crazy on the weekends. We see these gaps. So I think feeding into it, we could get a little bumpy tomorrow. That's it.
Thank you, Coach. All right. Just looking at this Swiss franc again. I'm looking for that liquidation move like we had in the copper, and I'm gonna get short. But it's not. They got a little bit to go.
Got to fade, huh?
They got a little bit to go. No, I mean I wanted to continue running.
No.
Let's see. What do we have? There we go. Price limits for tomorrow. Coach Paul talked about managing risk. Here are the price limits for tomorrow. We'll keep doing these until we don't need to, but the environment that we're in right now, we're, a tweet away, a headline away from limit downs. So it's important to know where these are. Again, for Topstep XFAs and live accounts, you need to be out if the equity market that you're trading is down 5%. The up 5% only applies to overnight markets. So if we find ourselves up, limit up today in the overnight session, then you need to know of those upside limits as well. Thank you everyone for joining. As always, if you haven't done so already, hit that thumbs up button. We appreciate it very much. Coach Paul, thank you as always. Andrew, thank you for helping us run the show. Couldn't do it without you. World Series picks. I don't watch baseball, but got to go with the home team.
The Yankees?
Absolutely. Got to go with the home team. I haven't watched a baseball game in a little while, though. All right.
I don't know. I'm supposed to say the Cubs, but it's not a high probability, although they're decent. But I'd say Dodgers again.
Right. Yeah. Yeah.
It gets boring because it's LA again against New York all the time. Where's St. Louis been?
I don't know. Last I heard, St. Louis was Pujols. That was like 15 years ago. I'm telling you, I don't pay attention to baseball much at all. It's a great sport, but pay much.
All right.
All right, Coach. Thank you, everyone. We'll talk to you all tomorrow. Trade well, manage your risk. Remember, we have classes all the time. Coach Hoop's doing a class in 15 minutes in Discord. We have Coach Ray and Coach Vince, 6 p.m., 7 p.m. Central Time. Dakota for 7:30 for slow markets. And we have Aaron Luce doing the London Open. Tomorrow's Friday, so I have to actually have to check if Aaron's still doing those on Fridays. No D tomorrow because tomorrow is Friday, but then we'll be back on Topstep TV during the opening call. See you all tomorrow. Have a great one. Bye.
Bye.